Hello everyone, this is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis, market commentary, trade ideas, and mechanical systems. And we've been doing this since 2003 for individual traders, investors, and some major institutional players. All right, so let's get started. This newsletter, it's basically a weekend review, and I'm recording this on Sunday, December 5th, 2021. I'll get back to this in a second, but one thing I'm going to, besides just these market newsletters, I do plan to do an educational newsletter video, perhaps later this week, and I'm going to do one on symmetry. This is a very powerful tool to have in your, say, trader's toolbox, use an analogy, and a very effective thing. You can pause the audio, look at this, but we used this quite effectively last week, and so I plan to do an educational video on that. All right, and going back to the website Breakpoint Trades, if you haven't done so, I suggest at least signing up for our free newsletter. We send out a lot of free newsletters from time to time, various educational content, stuff like that. So please do so, and I'll provide a link in the video description for that. So let's get back to the newsletter here. So this is the weekend newsletter for Sunday, December 5th, 2021. And moving this out of the way, we don't need to see all the audio recorder there. You can see the newsletter is divided into 5 major sections. This weekend newsletter, as always, is quite comprehensive. There's just over 100 charts here. We're going to cover the general market in depth from a top-down fashion. We'll look at the major indexes from the S&P all the way down to the other indexes. We'll also review some of the KISS charts. We're also going to look at a ton of market indicators. Remember, on our newsletters, the ones for the website, we give the live chart URLs that you can use those charts on your own. You can bookmark them in your browser, or if you have a membership to stockcharts.com, you can save them into your personal chart list. But you actually don't need a membership there. You can actually just bookmark the images, and you can look at those indicators anytime you want. Quite a few system type indicators. We'll also look at various bonds and interest rates. We'll look at major sectors. We'll also look at US dollar, commodities, precious metals, GDX. Like I said, hope everyone had a great weekend. I didn't put a bunch of audio commentary, written commentary here. It's going to be in the audio. But otherwise, here's some comments from my newsletter that I did a couple weeks ago on November 21st. I talked about how the markets were in a strong uptrend, but there were very troubling things underneath the surface regarding breadth. Well, the Nasdaq was making new all-time highs, but the number of stocks making new lows you kept having more new stocks making new all-time 52-week lows, etc. You had all kinds of warning signs, and lo and behold, that ended up playing out. You can see how I say here the market is very vulnerable to a correction. This was from my newsletter, November 21st newsletter 2 weeks ago, and that obviously played out. So let's go ahead and get started here. Item number 2 shows the index sector table, what transpired last week on Friday. Big down day, as you can see. Here for the week, solid red for the major indexes. The Russell has been leading to the downside. It was down 3.65% for the week. Nasdaq 100 down about 2%. Nasdaq Composite down 2.6%. S&P down 1.25%. The Dow down 0.9%. Remember, that's only 30 stocks. As far as the major market sectors, pretty good sell-off. Most of the sectors were down for the week. There's 21 sectors here we follow. Semiconductors was one of the lone examples, as well as home builders and utilities. Semiconductors still look vulnerable here. Potential little head and shoulder top, so we'll take a look at that. Now the US dollar, it was actually flat for the week. Looking down to cryptocurrencies, we had a mini crash over the weekend, so they got hammered. Bitcoin trading around 48,000 right now. Did trade all the way down to around 43,000. So we've had quite the sell-off here lately. Remember, Bitcoin had formed a perfect MACD divergent high about a month ago, which we pointed out. Commodities solidly to the red. So commodities have really been in a strong correction. They had a great 2021, but lately they've been selling off here. Natural gas alone down almost 25% for the week. It is near a major support now. We've been talking about that, but otherwise, you could see crude oil down 2.8%. The commodity index itself down 2.65%. The ags got hit as well. Precious metals got hit. Gold not as much. Maybe some money trying to hide out there, but it's not responding well, guys. This gold, or usually the stocks lead, and they've been leading to the downside. You can see GDX, the gold miners ETF, down 4.5% for the week. Now bonds, high yield corporate, up 0.9%. So they bounced. Remember, they were underperforming the market early, well before the market had a correction. So they had a little bounce for the week. TLT 20-year bond, big rally. So the long-term rates pulled back, as you can see here. Next. Item number 3 shows the economic news calendar. Not a lot on the docket this week. And obviously, the one thing to point out, last Friday we had the jobs report, and it was quite ugly. Okay. In fact, the last 2 job reports, job numbers, have been very low, very bad. So it's showing perhaps slowing economy, etc. So the last 2 months, the job numbers have disappointed. And so maybe the market has a little worry about that, or maybe it's thinking that the Fed won't taper as hard as they said they would. But we'll see how that is going forward. By the way, another thing that the Fed talked about last week was an end to the inflation, removing the taper word, which, let's be honest, we all know that was just bullshit. We knew that inflation was not transitory. So let me say that again, transitory. I said taper. So the Fed, as you know, have been calling the inflation transitory the whole year, but finally, like Captain Obvious, they stated the obvious, and which we all knew to be true all along. But anyway, I will say in the short term, commodities have been selling off. Maybe that'll help a little bit. All right, guys, let's go ahead and move on to the index charts. So the first chart below, item number 4, is a weekly snapshot of the major indexes. So the Dow up here at the top, you can see it's now been down 4 weeks in a row. Notice there's testing a little trend line support. This is important. If it breaks this, that could get quite ugly. Now, what we could see if we break this, we could see it, right now it's December 5th. If the market were to be down for another week, maybe it undercuts this trend line and then back tests it as resistance. Or we perhaps bounce off of here and form a lower high. Okay. But this is an important area. If you look at the S&P below, we're still holding this uptrend line, say from the October 2020 lows. We've had a nice sell-off the last couple weeks. The Nasdaq, also nice sell-off. We're still holding this trend line support. Nasdaq 100, I drew in a channel. Still have room to go down to the bottom of the channel. And the Russell, which broke out of this pattern over a month ago, sort of fizzled out. Didn't go very far. It lost this previous resistance, so it did not become support, and it's now approaching this lower support area. Next, chart number 5, here's the daily chart of the major indexes. So again, these September highs, which, we were first looking to potentially act as a support, obviously didn't act as much as support. You could see Dow just sliced right through it. You could see that lower support line, which I pointed out. Here's the S&P, slightly undercut it a little bit. Nasdaq still basically right at it. And of course the Russell, which completely lost it. Next. Chart number 6, here's a monthly view of the major indexes. Now again, it's only December 3rd, so I really not a lot of point in showing the monthly chart. But the only reason I'm showing it for you is because of November, the markets, a lot of the indexes ended with these spinning top doji candlesticks. Not on the Dow, that's been leading to the downside a little bit, like the Russell. But you can see it on the S&P. You have this spinning top doji. It's an ugly candle. We've had a hell of a run here. You can see it on the Nasdaq. You can see it on the Nasdaq 100. And as I've been discussing, you know, we've had such a run up from the, trying to draw this. All right, apologize for that, guys. I was having a little bugaboo with the software, but we've had such a run up in the apologize, guys. I'm having trouble with my software trying to draw a trend line here. But anyway, we've had such a run up since that March 2020 lows. My fear is that 2022 we're due for some consolidation. You know, I don't think that's too much to. I don't think that's out of the stretch for anyone to expect. So I think after this run up, it's not sustainable, the vertical slope we've had in the indexes. So I do think 2022 is going to be more of a challenging year for the markets. Okay. Anyway, here at the bottom, here's the Russell. You can see you got a shelf support. So we'll see where that goes. All right. If I actually got my software to work, guys, so this is what I'm talking about. We've had a hell of a run. Maybe 2022 is going to be more of a chop. Something like that. Okay. Let's move on. Image number 7. Here's a monthly view of the index. So you can see November ended with that spinning top doji gravestone type candlestick. Not a pretty candle. You can see some past dojis. They led to some sort of corrections. And December, we did undercut that a little bit. We tagged the 5-month EMA. So we'll see now if this does turn into more. Just to pull back to the 9 EMA would be perfectly normal. That's the 9-month EMA. But, you know, we may be due for more consolidation than that. And remember, guys, a couple weeks ago I talked about don't just assume that, hey, we're in this time of year, market can't be weak and have some sort of correction. I talked about that before Thanksgiving. I said, while Thanksgiving week is usually up, don't expect it that it has to be up. And Thanksgiving week was a down week, the first in a long time. And I also said that the first couple weeks in December may be weak. And so far, you know, we've started off December weak. Anyway, this is an ugly candle that we ended this for November. And we'll see how December goes. Next. Chart number 8, here's another monthly view of the S&P. This contains our moving average ribbon with our BPTMA Deluxe indicator here. Again, look how wide this ribbon is. Remember, a lot of our charts, we have these moving average ribbons. And I talk about when the ribbons pinch, that's when you're set up for a bigger move. Trade opportunities, and whenever they get too wide, you're set up for some consolidation. Look how dang wide this sucker is. I've never seen it this wide. And of course, you can see your spinning top doji here. You can see some of the dojis in the past. So that's what scares me longer term and into next year, is that this may need, this may need a year to work itself off. If you go back and listen to my newsletters last March, I talked about how the Russell 2000 weekly chart had a very wide ribbon and needed time to consolidate. Well, look what happened with the Russell all year. And now we have this on the S&P on a weekly time frame. So this chart here scares me. Next. Chart number 9, here's a KISS chart for the S&P, our KISS system. So far, the DVTs have not been hit. I think we've had 23 consecutive DVTs here. Those are high or low trailing type stops. You can see still 43.70. Again, these are pretty wide. They're not hit very often on the weekly. Also, here's your moving average ribbon at the bottom with the BPTMA Deluxe. And you can see right now we have the BPTMA is red for 2 bars. The last correction that we had was 4. So right now, this isn't out of the ordinary and under the past corrections, but I do have concern with the way the monthly charts look and those spinning top doji candlesticks that ended November. Next. Chart number 10, here's a weekly chart of the S&P. I showed this last week. You can see a ribbon up here. Again, we've had a hell of a run from this March 2020 timeframe. And we often don't discuss Elliott wave here because it can get, it's open to many different interpretations, etc. It gets confusing. But what I see here is a pretty obvious 5-wave uptrend. You could see wave 1, 2, 3, 4, and this 5 wave. And I talked about this last week that under the short-term bullish view, it's possible that we're still working on a wave 5 that'll end out here sometime next year, early next year, where this initial wave 1 up was wave 1 of 5, and we're working on a wave 2 of 5. But in order for this to play out, it cannot go all the way back to here. And it really needs to start rallying sometime soon. You could also have a more bearish view where it could have a wave 5 completed here. And you do have the necessary requirements. You had a new high there. You had a MACD divergence. So we'll see how this goes out. Here's another option. If we were to just say continue selling off for the next week or so, week and a half, get down to this area, kind of a sloping neckline, then rally to the, say, the Santa Claus rally, week before Christmas, but ultimately form some sort of lower high. You could see sort of how a head and shoulder could form. Left shoulder, head, right shoulder, and then next year would be a real bugaboo. So we'll see how this plays out, guys. Either bounce now or very soon, or we capitulate down and maybe could form this potential head and shoulder top with a 5th wave high in place. But either one of these scenarios are still intact. Next. Chart 11, here's a daily view of the S&P. You can see this channel. A couple weeks ago, we stalled right at the high of that channel. Before Thanksgiving, we had RSI divergence, MACD divergence. We've had a nice sell-off down to the 50-day moving average. So far, we bounced a little bit. We do have some support here. If we do go down again, your next support would be this trend line going back to March. Okay, and of course, then the 200-day moving average. Next. Chart number 12. Here's another daily chart. This one has the fibs. So we did get to the 50% fib retracement from this low. And by the way, speaking of the wave count, you can see the wave 3, 4. And if you look here, you can definitely see 5 waves up in this initial move up off the October low here. You can see a wave 1 here, 2, 3, 4, 5. You see that? So you do have 5 waves within the wave 5. So again, this could be, the bullish view would be, this would be wave 1 of 5, this is wave 2 of 5, and then you go up in a 3. Or the 5th wave completed, either way. Next. Chart number 13, here's the 2-hour chart. So again, you can see that wave count that I just talked about on the daily. Very clear wave count there. It ended, by the way, with MACD divergence. Pro tip, guys, wave 5s always have MACD divergence. If you don't have a MACD divergence, but you labeled a 5th wave, more than likely it's not a 5th wave, it's some sort of wave 3, okay? That symmetry I talked about, this talks about symmetry. So I'm monitoring the bounce of these rallies. So what I want to see is a break in symmetry here that'll at least signal an end to the immediate downtrend. Here's the fibs, of course. We do have some open gaps below, which could be magnets over time, is my concern. We have a little bit of RSI divergence on the 2-hour time frame here. Next. Chart number 14. Here's a 60-minute chart. By the way, guide, here's a real simple guide for swing trading. Move your stop up to each successive high or low. So this is the S&P, the 2-hour chart. So by doing this, let's say you were long back there in October, your initial stop, this high or low. You can see each new high or low here. So stop 5, 2, 3, 4, 5, 6. You'd have been stopped out back here in late November. So you'd have ridden that whole uptrend. You'd have progressively risen your stops to each new high or low. and you'd been stopped out up here, and you could have avoided this mess. But that's kind of similar to what the KISS systems do, but it's a very simple method. Just raise those stops to each higher low. Next. Chart number 15, here's a 60-minute chart. Now, you can see the same 5-wave pattern with the wedge up here. You can see the symmetry moves. Here's my concerns. You have these open gaps below. You have one back here from mid-November at around 44.89. These open gaps on the cash can be magnets. They've got one around 44.40, and you got a big one down here in early November at 43.67. So on an immediate sell-off, to me, these would be targets to the downside. Okay. Next. Chart number 16. Here's a 60-minute chart of the S&P with our cycle indicator. And as I've been pointing out, lately the cycle indicator has done a damn good job about catching these rallies, the lows and the peaks. It's a perfect little job. The cyan is cycle support. Magenta is cycle resistance. And you can see it's done a damn good job. Where the cycle indicator excels at is ABC type moves. And if you want one for the bulls, this would be one for the bulls because it's suggesting that this pullback is more ABC in nature. Okay, you can see on late Friday, we had a little cycle support and price bounce from that. So that's one for the bulls, that the fact that the symmetry here, that the indicator is perfectly following price. All right. Usually when you have a trending move, what will happen is price will either fall right through the cycle support strongly or go right through cycle resistance strongly. But the fact that it's catching all these little highs and lows, at least hint that the pullback is more ABC in nature. So we'll see if this ends up playing out. Next. Chart number 17, here's a 15-minute chart of the S&P. You can see these rally attempts, very symmetrical. Approximately 90 points on all these rallies. Okay, symmetry is a good guide. So we need a rally larger than these to break initial downtrend symmetry. On Friday, we did have a little MACD divergence. Futures are up a little bit tonight. They're up 13 points, but let's face it, guys. ES up 13 points is a pimple, considering these, 65 and 100-point moves we've been having. Next. Let's go and move to the KISS chart. So chart number 18, here's the daily KISS. So the KISS system here it triggered out, went to cash back in September when it hit the DVTs back here. It then went back long in early October on this vertical line. By the way, this is the weekly ATR, if you're wondering. And then you had a series of higher low DVTs. These were hit over a week ago. So the S&P KISS system's been out in cash. Okay. So this is a good guide to help protect you if you're worried about corrections. You could also use the weekly version, which would still be long. Next. Chart number 19, here's the various cycle time frames. I like to use these as guides. They're charts with moving average ribbons, 60 stochastic, and some of these DeMark type indicators and the cycle indicators. So the daily charts up here. Notice we do have a little buy cycle that appeared on Thursday last week, and we did get a bounce so far. Here's your half day. We got a DeMark 9, got a little oversold. Here's the intraday charts. On the 120-minute, one thing I watch for is the 60 link stochastic. Whenever it confirms below the 50% area, you're in a confirmed downtrend, and you can see that happen back here on the 26th. You can see how stochastics rallied up and back tested it, found resistance there. And here's the 60-minute time frame. That happened on the 23rd. And look, it retested that 50% multiple times. But look, here's your cycle indicator, which I talked about. It's done a good job about catching all these little peaks and valleys. Next. Chart number 20, here's the Dow. Don't often talk about the Dow. It's 30 stocks. But first off, from a symmetry standpoint, we've had about a 2,600 point pullback from the highs here. So that's larger than these point pullbacks. Now, it's not larger than the one back here, but this is pretty good pullback. Do we bounce here, form a lower high, or do we break this? We'll see. The recent highs did have an obvious MACD divergence. Next. Chart 21, here's the weekly kiss. So still holding that DVT, but just barely. You can see it's been intact since early 2020. Next, chart 22, here's the daily chart of the Dow. So again, quite the sell-off here, and it started in early November. So it's been leading the market down along with the Russell. You can see this trend line here, sloping trend line. We've had a weak bounce off of it. We're still below the 9 EMA. The question is, do we form a lower high? That's kind of what I think could happen. Form a lower high into this range and sell off. So we'll see. Breaking this, here's your next support areas down here. Big one right here around 33,000. Then you have sort of an what I call air pocket here, area of little support, basically about 1,000 points all the way down to 32,000. These are your next supports below. Next. Chart 23, triple Qs, down 2 weeks in a row. We're still holding this uptrend line. We've been diverging here on the MACD. Now, what we've seen is a lot what I call the generals. The problem with the Nasdaq is you have 7 stocks essentially controlling 52% of the movement. You know, things like Apple, Facebook, Netflix, Microsoft, and those generals are taken out and shot. The market could be in trouble, and some of them have already been taken out and shot, like Netflix. Microsoft had a good sell-off on Friday in particular. Next. Chart 24, here's the weekly kiss for the triple Qs. It's still intact here as well. Still quite a bit of room there. Next. Chart 25, here's the daily triple Qs. Again, take a look at this, guys. You have essentially 7 stocks here controlling 52% of the triple Qs. All right, so if you're trading the triple Qs, you want to be watching these stocks. You can see Google's counted twice, essentially. But essentially 7 stocks if you just count Google once. So anyway, we've had a nice sell-off since there. We had this neckline support. We lost that on Friday. You can see you have the 50-day moving average here, which we bounced off of, 50% fib. Moving average ribbon is pinching and trying to go negative here. Again, we had MACD divergent high. You had tons of negative breadth up here, all kinds of warnings. So we'll see if this can form a higher low or not. Next. Chart 26, here's the 2-hour time frame. Just like in the S&P, you had a perfect fifth wave high. Whenever you have a 5th wave high with some sort of MACD divergence, especially when you had that negative breadth that we saw in November, it's time to scale things back, guys. Get out of Dodge, add some hedge protection, etc. You can see so far, tried to bounce around the 50% fib. But any MACD divergence? Nope. No RSI divergence either. Still very ugly. Next. Chart 27, here's the daily kiss. This also hit its DVT last week, not surprising. Next. Chart 28, here's the various cycle time frames. And again, really not much to say here. ATR, it's kind of your resistance in all these time frames. And like on the S&P, the 60 stochastic firmly below that 50% area on the lower time frames. We even lost a little bit here on the half-day chart. Now the dailies are still intact for now. Next. Chart 29, here's the Russell 2000, down 3.65% for the week. Again, you can see I talked about back in March, those moving average ribbons were really wide. They didn't really look wide here, but if you go back in March and look at my charts, they were very wide. And it resulted in this long sideways consolidation. This broke out in early November, didn't go very far, fizzled out, and it has come back hard. Okay, that's your next little line of defense. But losing that, things could get ugly because, quite honestly, this area in here is an area of little support, kind of like an air pocket. This is your big support way down here. So, ugly, ugly. Next. Chart 30, here's the KISS weekly. So this was technically hit on the weekly, not surprising. Weekly KISS. Next. Chart 31, here's the daily chart. So again, we busted out this resistance there in early November, rallied up a little bit. We formed that black candle doji I warned about a pullback at that time frame. I talked about the wide moving average ribbon. Again, I didn't expect it to come all the way down here like it did, but hey, that's what happened. That was your warning to get out. Pulled down to here. I tried a little long at this back test of this previous resistance. Quickly got stopped out. And all the way down to here. You could see last week we had a little bounce on Thursday and then a sell-off on Friday. Still looks quite ugly. Kind of like a stick sandwich here. That's your support. Your 90 EMA is your current resistance. You know, the only positive here is we do have what you could call some sort of capitulatory volume here. All right. Next. Jabber 32. Here's a 60-minute chart. So one thing I'm monitoring in the short term is we do have some MACD divergence. And notice the dotted lines. This is your symmetry. So if we can have a rally off the lows larger than this, you'll break symmetry. And if you can break symmetry, then that'll, from my graphic here, we'll put higher odds at a higher low to form. Okay. So I'm going to be monitoring this symmetry. Next. Let's look at the FANG stocks. Here's Apple, Crapple, whatever. You can see it formed a divergent high last week. It's come off only a little bit off the highs. If this sell-off starts to intensify because Apple is such a large component, that would put a strain on the market. But obviously still holding up very well. Next. Jabber 34, Microsoft. I talked about this shelf support. In fact, I added it to our watch list as a short. Well, this triggered on Friday for a nice quick short. You can see it got near the 50-day moving average, bounced. But you do have an open gap here, which I think is still a target over time. You can see sort of a little head and shoulder top. Next. Jabber 35, Amazon. Had a double top back here in mid-November. It's selling off. We also had a little short back here. On Friday, it tested its 200-day moving average. Next. Jabber 36, Google. Had a perfect double top back here. It's been selling off. Next. Jabber 37, Netflix. Nice sell-off. Okay, first off, just from a technical perspective, you had a beautiful... This is another one I plan to do an education on. These are one of my favorite setups. It's called the MACD Kiss Stochastic. And this was a short example. So it's where you get a MACD Kiss and you get a stochastic that either it gets overbought for a short or oversold for a long. It's hard for the stochastic to get overbought, oversold, and not have the MACD cross. So everything was set up here. You got a doji to be used as a short trigger with its initial stop. So this was a beautiful setup. But anyway, this is played out. So again, guys, think of these stocks like the generals. They're the things that have been holding up the market. They're taken out and shot. Market could have issues. All right, that does it for the indexes. Let's go ahead and move on and look at a bunch of indicators. Jabber 38, here's the S&P versus the value line. I talked about this a couple weeks ago, this divergence where the S&P formed a higher high, this formed a lower high, and lo and behold, played out. It was a nice warning. It's a good chart to keep an eye on over time. Next. Jabber 39, here's the S&P versus high yield corporate. So the two moved together, as you can see, lockstep, but they started to diverge back here in October, November. That was a nice early warning. Take a look at that. High yield corporate really started underperforming, and it gave you quite an early warning. Next. Jabber 40, here's the Nasdaq volume McClellan oscillator summation. So a couple weeks ago, I showed this indicator. And it was at the time, it was just starting to cross. The Nasdaq was at the highs. And I said, you know what? It did something similar back here. We had a sell-off. And, lo and behold, that little sell signal ended up playing out. Again, members of Breakpoint Trades, you have access to the live chart URL to have this indicator on your own. Next. Jabber 41, here's the VVIX. So one way we use this indicator, when it goes over the 110 line from below 110, above 110, it gives you a warning. This occurred in November twice. Okay. The last time it occurred in mid to late November, it was a great early warning signal up here at the highs. So this was something I used to reduce market exposure personally, and I advised a couple clients about it, and this played out very well. You can see now the VVIX is higher than it's been for quite a long time, actually since March 2020. It's above all these previous peaks. Next. Chart 42, here's the VIX. The VIX has been running up. You could see on Friday alone, it went up over 35. And technically, I think it closed slightly back inside its bands. Lately, the VIX Bollinger Band buy signals haven't been working very well the last couple. So technically, we did get one on Friday. We'll see if that ends up working or not. But volatility has come back in, as you can see. Next. Chart 43, here's a weekly chart of the VIX. You can see where it is. Obviously, it can spike a lot higher if it wants to. The market, say, wants to capitulate down. Maybe we'll see it in the 40s and 50s. I doubt we're going to see it back here at 85 like we did in 2020. That was just crazy, but you never know. You can see this nice clean uptrend line on the index itself, too. Next. Chart 44, here's a very nice chart. It's one of these charts where we have a bunch of these very useful indicators on one chart. Here's the VIX with the Bollinger Band. So it's easy to see when the VIX closes inside its Bollinger Bands here with this histogram. Here's the VVIX. It did not close inside its Bollinger Bands. So the fact that it did not, but the VIX did, is maybe something that, maybe you want both of these to agree. And here's the VOMA line right there. Here's the NYMO and NYHL. That's the new highs minus new lows when it goes below its lower Bollinger Bands. Note, now I'm going to talk about this below. The NYMO and this one, we're starting to get a little less lower highs here. In fact, this is going to be hard for these now to go below the lower Bollinger Bands. Sometimes you start seeing this near some sort of trade bottom. And I'll show you an example when we get to that below. Next. Chart 45, here's the NYMO, or the NYMO, I mean. Oversold system. Again, when you falls below the lower Bollinger Bands, you get your trade bounce. But notice what happened here. It's well inside the bands, and it's not going to easily be to get below the lower Bollinger Bands at this point. Kind of like what I talked about above. A lot of times you start seeing this behavior near some type of trade low. Chart 46. Here's the NYMO and NAMO on one chart. It's kind of nice to have them on both, and you can see the same behavior where they were below their lower Bollinger Bands back here, but now they're not going to be able to get below the lower Bollinger Bands at this point. So here's an example. It's kind of hard to see, but here's the NYMO right here where we're at, and here's the NYMO, say back in the 2020 March timeframe. Notice how it spiked below the lower Bollinger Bands initially during the decline back here, but then on this hard sell-off at the bottom, it was not below the lower Bollinger Bands. It was unable to do so. So we could be seeing something like that where we're just not going to see the NYMO or NAMO back below its lower Bollinger Bands. Okay. Next. Chart 48, here's the McClellan oscillator systems. I have these for 4 indexes. The S&P, the one up here, it's kind of cut off, is the Dow. This one is the triple Qs. This one is IWM. And all these have done, you can see the Qs have done a couple winning trades here. But you can see, again, we're seeing the same thing here. These McClellan oscillators are far from their lower Bollinger Bands. Probably not going to do any trades anytime soon. Next. Looking at some of these breadth indicators, here's the NYSE with the new highs, new lows. So as far as new lows, we did get a spike of new lows at the lows last week here on Wednesday. That could have been a reversion to mean buy signal. We got a little bounce on that. Here's your supports below on the NYSE. Here's your new lows. And here's your, at the bottom, the new lows minus new highs. That's also a good indicator when it spikes below the lower Bollinger Bands, for a reversion to mean type bounce trade. Would have worked if you bought on Wednesday for at least a trade on Thursday. So again, guys, For members of Breakpoint Trades, we provide you the live chart URL to this. It's a nice clean chart, and you can just bookmark it in your browser and use it on your own instead of waiting for me to show it to you. That's a benefit of signing up for a Breakpoint Trades membership if you're not a member, if you're just looking at this on YouTube. Next. Chart 50, here's the Nasdaq. Now, one issue, the Nasdaq here, notice we got a new spike and new 52-week lows on Friday. And remember, guys, I talked about this. If you go back and listen to my newsletter 2 weeks ago, when the Nasdaq was up here at new all-time highs, we had new 52-week lows spiking, and we had less new 52-week highs. So you had a huge divergence here. There was something wrong. And lo and behold, that ended up being an early warning signal and playing out. And here's the 52-week highs minus lows. Really like this chart. It's a really cool chart. So again, if you're a member of Breakpoint Trades, you have access to the live chart URL. Next. Chart 51. Here's another chart. And to me, this chart was really compelling too. Has the NAHL indicator here spiking down, but I'm not going to talk about that. What I'm going to talk about here is the percentage of stocks above their 200-day moving average. Back here when the Nasdaq was at new highs, the percentage of stocks above the 200-day moving average was around 35%. You just don't see that type of things. Usually it'll be up around 70, 80%. I've never seen it this extreme. All right. We also had a lot of what you call Hindenburgs. Okay. Here's a chart with the Hindenburgs. This is from Sentiment Trader, and shows that there were 12 combined Hindenburgs back there in late November, and those led to some pretty big sell-offs in the market event, and that's my concern long-term going forward. Next, chart 52. Here's the NAHL indicator. Is a cumulative, and something I talked about was a warning that this was starting to undercut this, and you can see it's really undercutting this. But look in the past, when it starts going, you know, it could take quite a while to work this off. Next. Someone asked me on the weekend to look at the yield curve. So here's the yield curve chart. And yield curve is not in danger of going negative at this point. Remember, the yield curve is the 10-year divided by the half year. And it's whenever it goes negative here, that's a good sign of some sort of future recession. But I will say that it's come quite a bit off the high. So, you know, what it may be saying here is growth has been slowing quite a bit. And we've been seeing that in the jobs data, haven't we? Next, chart 54, here's another yield curve chart. It's a little cleaner one. It's got this histogram. Again, it's still a long way from going negative, guys, but we'll keep an eye on that, obviously, going forward. Next, chart 55, here's the 10-year Treasury yield, TNX. It's the weekly chart. You can see it's starting to break this coil to the downside. So despite the fact the Fed talking about tapering, long-term rates have been dropping here. Maybe they don't believe the Fed. Next. Chart 56, TLT on the weekly, rallying, breaking out of resistance here. Again, that's mirroring the action in the TNX above. Next. Chart 57, TLT on the daily. Next. Chart 58, HYG, high yield corporate. Down. They did rally off the lows last week. Remember, they'd had a double top back here in November. Gave a sort of early warning signal in the market back then, but got oversold, trying to bounce here a little bit. All right, guys, now let's take a look at the market sectors. We're not going to take a look at all of them, but we'll take a look at most of them just to show you what things look like under the surface. Here's the financials. They undercut this support. Little bounce in here, but it still looks weak, doesn't it? That's resistance. 200-day moving average may be a target down here. Next. Chart 60, here's the banks. Bounce back to its 9 EMA. It looks like a bear flag, doesn't it? 200-day is right here, and it's your next support. Next. Chart 61, transports. They've also had a healthy correction. No longer looks like a cup and handle, doesn't it? We were looking at that possibility back here, but it doesn't look like that at this point. Next, chart 62, XLK Technology. So starting to undercut this support, but I hate even showing this sector. Look, guys, two stocks make up 44% of it, Apple and Microsoft. And if you hadn't thrown in NVIDIA, you're at 52%. Otherwise, this is your big support if it breaks down here. Next, chart 63, XLK communication sector contains a lot of these FANG stocks. This looked very ugly a couple weeks ago. Lost that shelf support there. Not surprising, fell all the way to this one. Little weak bounce so far. 90 MA would be resistance, but if it has another downtrend, if it loses this, that would be your next support. Next, chart 64, semiconductors still holding up very well, but if it loses this trend line here, it'll likely have a big sell-off down at least to the 50-day, maybe to this area. Next, chart 65, SOXS, triple inverse ETF for the semis. Kind of has a bullish bottom look to it, doesn't it? That's your resistance there. That's a way to trade a pullback in that sector. Next, chart 66, biotech, weekly chart, down 6.2%. Remember, I've had this drawn for quite a while. I had this coil. It started breaking last week, followed through this week. This would be a major support. I may buy a long-term swing trade down here if it gets down to here and starts curling up. Because, you know what? That would be a heck of a correction from here, and I think it'd be low risk. Next, chart 67, here's the daily chart. Again, ugly on the daily. Look at this sucker. It was 174 back in February. It's now below 110. So for an ETF, biotech, heck of a correction there. Next, chart 68, 60-minute chart. Or you can see this nice downtrend, moving average ribbon. I'm utilizing symmetry here. You can see these bounces. To confirm and into this downtrend, we need to see a rally larger than symmetry. We need to see a break in symmetry. Then that'll put higher odds at a higher low forming. Next, chart 69, industrials sold off last week. This now is potential resistance up here. Here's your big support levels below. Certainly hope it doesn't have to go down to these areas. Next, chart 70, materials. Lost supports here, back testing them, now resistance. Next, chart 71, consumer staples. Next, chart 72, utilities, little shelf support, bouncing here, volume's interesting. Next, chart 73, healthcare. So far, a little ABC-like pullback. We got resistance at these moving averages up here. Next, chart 74, consumer discretionary after a MACD divergent high, RSI divergent high, nice pullback near the 50-day. Next, chart 75, XRT retail, also dumped. These are your big supports down here. Still looks weak, doesn't it? Next, chart 76, real estate. This is still holding up fairly well, isn't it? Next, chart 77, XLE energy. So far, this has pulled back nicely from those November highs. 50-day moving average now then is resistance. Next, chart 78, oil services, inverse head and shoulder that we talked about in September played out for a rally, but it's come all the way back down. And finally, chart 79. Remember this chart, the bullish percent energy? I talked about this when it was at 100% back here in early October. I said, be careful, guys. Energy stocks are very overbought. It's not sustainable. And lo and behold, you could see that was a good get out of Dodge exit. Remember, these are percent charts. 100 is the highest they can get. So that was a nice warning. It's now down at around 57%. Next, let's move to commodities. DBC, this is the commodity index. Nice sell-off here over the last month. You can see this fifth wave type move. Big supports down here, but commodities have had a nice correction, obviously. Next, chart 81. Here's the daily chart. Nice sell-off from the October highs. 200-day moving average here. We'll see if this can provide some support. Next, chart 82. Crude oil, weekly chart. Down about 2.7, 2.8%. Crude oil is at a nice pullback here. Next, chart 83. Here's the daily chart. You can see it's trying to bounce off this expanding rectangle, triangle type pattern. These are your big supports below. Should it lose those? Next, chart 84. Natural gas down almost 25% for the week. Remember, guys, I talked about these moving average ribbons getting too wide back here, just like they were back here. You see how good guide that is? Then when they're pinched like this, that's the time to buy it. Like right here. When they're pinched. But look at this sucker. Big sell-off. Next. Chart 85. Here's the daily. Now, that big sell-off may be creating some opportunity. We're near the 200-day moving average down here. Next. Chart 86. Here's the ETF. UNG. Again, this would be a low-risk area to watch for a potential trade opportunity. Long. Next, chart 87, copper. Copper down about 0.5% for the week, testing the 50-week moving average here. Next, chart 88, here's the daily chart. It's kind of chopping around, quite honestly. All the moving averages now are kind of bunched together, 200-day, 50-day, 20-day. Next, chart 89, DBA, agriculture ETF. Got up at resistance up here. In 2017, a little logical pullback, but it's been a very strong commodity. Look at this run up it's had since 2020. MACD divergence up here may be due for some consolidation. Next. Chart 90, here's the daily chart. Next. Chart 91, one commodity that hasn't really pulled back is coffee. Look at coffee. It continues to hold up very well. Next. Chart 92, uranium. Well, uranium hasn't held up. It obviously had a hell of a run from back here when I talked about the start of that bull market in 2020. But nice sell for the last 3 weeks. Down 7.4% last week. Next. Chart 93, here's the daily chart. Let's see that wedge played out. Maybe down here to 200-day, you'll get another trade opportunity. We'll see. Next. Chart 94, Bitcoin. Had a little mini crash over the weekend, got down to 43,000 here. Again, we talked about this MACD divergence way back here in early November. This was an area to be cautious. So, you know, what you'll learn in these cryptocurrencies, when they get like that, sell up there when you get that MACD divergence, and then buy these, you know, big washouts. So we'll see what this does. Obviously, it's downtrending here right now. You can see the 20 bearish squeeze here. Next. Chart 95, Ethereum. Now, it's held up better than Bitcoin, but it did have a little flash crash on Friday. Next. Chart 96, Mara. Got absolutely hammered here recently. Look at Friday's action, down 15%. This was at 83.45 high on November. It's now down at 41, so it's been cut in half. Here's your long-term support. By the way, this Mara, one of the best of the bunch, it mines Bitcoin for about 7,000 a Bitcoin, so that's where it gets its profit from. It can then sell the Bitcoin, you know, right now at 40-something thousand. But there's a new one coming out, IPO, called Rhodium, that apparently can mine Bitcoin for $1,200 a coin. I am very interested in looking at that IPO. Okay. Next. Chart 97, US dollar. It's had this bullish look for quite a long time. Little pullback, but it still looks bullish here, doesn't it? This could be your next long-term target. Next. Chart 98, US dollar on a monthly chart. And showing the monthly because you can see your support and resistance. We found support in here, long-term resistance up here. Next. Chart 99, euro. This head and shoulder pattern I showed back in the early summer obviously played out. Next, moving to precious metals, gold. Well, gold has not been able to shine. It's been pulling back. You can see it stalled this resistance area. It's been range bound, quite honestly. Next, chart 101. Here's the daily chart. Did rally on Friday, but back tested that broken trend line as resistance. The stocks are underperforming here. That concerns me. Next, chart 102, silver. Boy, silver looks kind of ugly here, doesn't it? Silver could easily sell down back here to 19. lose this shelf support. Next, Chart 103, there's the daily silver. You can see it's stalled right at the 200-day moving average there. Been selling off. Quite oversold here, though, short term. Next, Chart 104, GDX, gold miners. Well, they've been downtrending since 2020. Forming another lower high here. These gold stocks just suck, guys, quite honestly. Next, Chart 105, GDX on a weekly. Here's the symmetry target if it wanted to go down to this area. Could it do so? It could. Next, Chart 106, the final chart. Again, stock GDX has been underperforming, guys. We need to see that start outperforming. We'll see if this can form a higher low or not. You know, it undercut this support here, trend line, that's resistance, 50-day moving average resistance. Guys, the gold bugs have their work cut out. Anyway, ES futures tonight are now up about 23. We'll see where they open on Monday. Again, happy holidays, everyone, and we'll see what this crazy market does this week. Take care.